Morning, Top Gun here, 20 after 2 on Sunday morning, February 14th. This is the week ahead preview. Section 1, the Momentums of Messiah. Jason Zweig had an excellent column in yesterday's Wall Street Journal about some of the celebrities, especially business celebrities, pushing some very speculative investments via their Twitter accounts, where they have millions of followers, and influencing those followers to buy those investments. For example, Chamath Palihapitiya urging people to, or telling people that he bought GameStop, talking about Bitcoin going to $150,000. Elon Musk pushing Dogecoin. Mark Cuban saying, "Hey, Dogecoin's better than a lottery ticket." Now, these are guys with a lot of influence. They're billionaires. So when people see them saying this kind of things, they go out and buy it. The average person doesn't know. Say, well, this is a very successful person. And so, unfortunately, this looks to me like an abuse of power by these guys who have tremendous influence. And they're pushing people into very speculative investments that are likely to end badly for the average investor. Very interesting article, and just another illustration of the insanity of this market. Never thought I would see this kind of thing with being done with real money in the financial markets. All right, now let's take a look at a couple of earnings reports for the week ahead, starting with Shopify, which provides online platforms for businesses to do business online. Now, this has been one of the best performing stocks in the market in recent years. And it's now reached a market cap of $182 billion. Now, Shopify is doing very well during the pandemic, as brick and mortar businesses are migrating online where their customers are, and doing so via Shopify's online platform. So in the third quarter of 2020, Shopify had 96% revenue growth and reported an adjusted profit of $1.13 a share, up from a 29-cent loss in the year ago period. The problem is that Shopify stock is absurdly expensive at an enterprise value to trailing 12-month sales ratio of 84 times. That's sales. And I'm giving Shopify credit for the $6 billion in cash and investments on its balance sheet and no debt. So, the stock itself has actually run up 33% just in the last 2 weeks during this really crazy last 2-week rally that we've had. So I think Shopify is going to report a really good fourth quarter. Whether it's good enough to move the stock higher, I don't know. It's really a coin flip in this kind of market, and it's just not investing at this point. It's pure speculating. All right, let's move on to Walmart. Walmart's fundamentals are also very strong, with U.S. comps excluding fuel up 6.4% in the quarter ended October 31st, 2020. Leading to a 16% increase in diluted earnings per share. Now, Walmart is not cheap either, although the stock has been neglected in recent months as investors shift out of consumer staples and into higher beta tech names. But Walmart still trades at 26 times trailing 12 months EPS. So while it's still recognizably an investment compared to Shopify, which is a lottery ticket, it's by no means absolutely cheap. So I think Walmart's also going to report a really good quarter. The question is, how much is priced in? So that's it for today, and we'll see you guys next week. Enjoy the rest of your long holiday.